Welcome back to Real Estate Insiders. I'm Danny Poulos with the Elite Lending Team at Femby, and I'm here with Kevin Spina still from Kai's Real Estate, and we're going to talk about some pricing strategies that have really come into play just because of the changes in the market and as hot as things have been. So welcome back again, Kevin. And so let's talk about, we all know that there's stuff on the market that seems to be selling very quickly, sometimes a day, next day, sometimes before it goes on the market, yes. Right? And then there's other properties that seem to be sitting for 2 or 3 months, and I think most people would agree that it has something to do, may have to do with other things too, but it has something to do with price. Okay, so let's talk about first those properties that may be priced a little bit above market. Okay. Tell us about that seller.
Okay. I mean, right now we've got extremely low inventories.
Right.
So we are seeing people with an upward trend in the market saying, you know, I'm now ready to sell my house, and I do want to sell it for the most I can make it. So there's that difference of overpricing the market and pricing slightly above the sold market comps.
Right.
And then understanding that there's a sold market value and there's an active market value. So
right.
When people say, well, my neighbor's on the market for $700 and my neighbor's on the market for $800, but the market comps are in the 6s, you've got to look at market values, not active listings.
Right, so you're not looking to price your house the same as other houses that aren't selling.
Correct. Correct.
But we know as the market is moving up, that doesn't mean you need to be bound by what the last sales were either, right? You were explaining to me that you still want to be above that number.
Correct. I mean, you want to be priced within the market comps, but in a range that you'll sell. So let's say you want to sell a house for $510,000, and that's the market value. Would you price it $575 or $525? I mean, I would tend to price it $525.
Right.
And again, how you get that house out there. And again, you talk about houses that sell before they're on market. I've got a property coming on market in November that I've already sent out to probably 20 different people. We're doing an email blast this afternoon. So that house will get activity based on there's no homes in the neighborhood, it's priced right, and it's priced tight, and it probably will draw a number slightly above the market. It's clean, it's corner lot, oversized lot, got nice upgrades. So there's a particular case where you could see a new market high, and it'll work. Again, then we run into the how do we get it financed and how do we get it closed.
Right. But now if I'm the seller, though, we're talking about that same house, and I want you to price it $50,000 higher than what you're telling me it should sell for. It doesn't matter when you let everyone know about it. Those are the ones that are more likely.
Those are the properties that, unless they're extremely unique, they will sit. Or if they're dramatically over-improved, then there's that possibility. I mean, people will pay for improvements, not dollar for dollar, but they will pay for improvements. You know?
So, like you say, dollar for dollar. So someone puts a swimming pool in and it cost them $40,000, and they did that 2 years ago. The fact that the house next door sold for X amount and doesn't have a pool doesn't mean they're going to add $40,000
on an appraisal value. You might get $10,000 to $15,000 for a pool.
Right, so that's what they would call not overproof, just overpriced.
Yeah, I mean, you can't put in a new kitchen, and put in an $80,000 kitchen in a neighborhood that doesn't support $80,000 kitchens.
Right.
And people do it,
So your challenge is, I'm the seller, I come to you, and I want to put it in your hands.
Right.
Say, Kevin, tell me what my house is going to, I mean, you can figure it out. I know you can tell someone what the house is going to sell for ahead of time. Whether it's at the market price, a little bit above the market price, but just with your experience in the market, you know ahead of time what the house is going to sell for.
Yeah, I mean, we're doing a good job right now in selling homes over market value, slightly. And we're able to do that with limited inventories, low interest rates, and people. There are buyers out there, heavy deposits down, that are willing to spend over appraisal.
Right. So there was one of the keys right there with the money down, because the challenge has to be the client that comes in with either FHA 3.5% down, a conventional 5% down. and if that's all the money they have, you need to find them a house that they can buy at appraised value, right?
Correct. Yeah, you need to educate the buyers. You need to tell the sellers what type of buyer we need, and then depending, like say, if we're representing a buyer and we know that they've lost numerous homes, and they say, well, how do I get this home? Say, look, we know you're an FHA buyer or a 5% down conventional. If you want to buy this home, it's going to cost you another $12,000.
Right.
Because the appraisal market's this. Let's present a pre-approval letter. Let's have proof of funds for an additional $10,000 or $12,000 or $15,000, and state in our contract that we're willing to purchase this property 5%, 3% over appraised value if it doesn't appraise.
Yeah, I know from the lending side, we see it, and someone may come in and say they want to put 10% down. We'll verify that they have the 10%, but we may even, working with the agent, say, let's put this together approved with just 5% down, and let's hold on to that other 5% in case they need to pay 2-3% above the appraised value.
Right.
They're still in that house because you have your approval with as little as 3.5% or 5% down. But you as the agent are going to want to know up front, do they have that extra money to cover the little bit above appraised value, right?
Yeah, representing the seller, we got to keep the deal together. So we're making that call to the mortgage broker. We're making that call to the inspectors. We're doing everything we can to keep it together. And we want to know that, one, if we get to an appraisal issue, because again, appraisal is nothing but an opinion of what the house is worth.
Sure.
You do 5 appraisals, you can get 5 different numbers.
Sure.
And with where interest rates are right now, we're telling people, don't be concerned if you got $10,000 difference. 7-8 months ago when rates were down in the low 3s, if you had that house today, just the difference in interest rate is saving them far more than the $10,000 they put down.
Really, the advice is still the same. If you find the house you want, don't let a couple $1,000s separate you from that, because you maybe ought to get that house later for the extra money that you refused to spend, right?
The market's moving.
And then, quickly, one last other thing I wanted to cover is you were telling me that with the bank-owned properties on the market, how they're ending up with multiple offers. How are they doing that?
Yeah, the banks are, in most cases, are pricing their homes below market value, below the sold comp value, and as much as 10 to 15% below the value. They're doing multiple offers over a period of 15 days, and then they're going best and final. And we're seeing a lot of people say they keep losing bank offers because they're not making an offer of the true value. House can be listed for $350 and sell for $385.
So just because you look at it and it's listed for less than value, so it looks like a great deal, that's really the key. It looks like a great deal, but in most cases you're probably not going to get it for that money, right?
No, we're seeing most REO properties sell 5, 10, 15% over the list price with multiple offers.
Right.
So you got to shorten your inspection, put down more money, quicker closes, write an attractive deal.
So your advice to buyers is really, if you want the property, you better listen to somebody.
Hire a good agent.
and offer what you're going to need to offer to buy that house. The people say, well, I only want to buy it if I can buy it for this. Well, you're not going to buy it.
You're not going to buy it.
Somebody else is going to like that house more. If it's not worth out today, it's worth that 3 weeks from now, but the right person's going to get that house. So it's tricky out there. It's very for buyers and sellers, and you better be working with someone who knows what they're talking about. So on that note, tell people how they can reach you so they can be talking to someone who knows what they're talking about.
Yeah, you can reach me on my cell phone at 561-722-1169. It's Kevin Spina at thespinagroup.com or the Spina Group website.
Thanks for joining us today. Had a great time.
Thank you.